firms, and we could go on about voting with Belarus and Russia at the UN. I guess the question is, do you believe that will, in fact, inhibit capital or the flight of capital to the U.S. in the end?
Yes, definitely. I mean, one of the great advantages of being an American business is that, or prospective American business, is that capital flows here. And it flows here when people get worried about stuff all over the world. Now it's going to start flowing out. I think it already is flowing out. And that will affect not just U.S. capital markets, but real things like manufacturing and other kinds of activities that might have come to the United States because, among other things, of the firm rule of law. And now people abroad with money, financial and real investment, are going to be thinking twice and three times whether the United States is a sensible place to send it.
Finally, Alan, you also mentioned sort of the change in terms of spending and the workforce. We talked yesterday with the CEA chair about this. This administration focused on having the private sector step up more in terms of spending and hiring, and obviously the cuts going on amongst the federal workforce. Do you see that transition being successful?
No. That goes along with the mild recession forecast. In a mild recession scenario, which I think is the most likely, private sector employment in total goes down. Now, it may go up in some protected areas. There is a history of selective, targeted tariffs raising employment in specific industries at great expense, by the way. Numbers like it costs $600,000 per job are common in that literature, in that empirical literature. So things like that can happen. But the idea that it would actually raise total employment strikes me as somewhat fanciful.
So you raised this vector of stagflation, which is a worrisome word. Slower growth combined with higher inflation. And I don't think the Fed wants to go there, and I don't think anybody wants to go there, right? But if we are in a period like that, as you say, that's the risk here, what does the Fed do? Does it put more weight on the inflation side or on the low growth side in terms of a response?
Well, that in stagflationary episodes, that always has been and still is the $64 trillion question for the Fed. It puts the Fed or any central bank in that position in a very in a dilemma, because it can lower interest rates to try to fight a recession, or it could raise interest rates to try to fight an inflation. But if you have them both at the same time, you have to pick your risk, basically. The current standard way of thinking about that, but it was not meant for these circumstances, it was meant more for an oil shock and things like that, is to look through them and sort of almost pretend they're not there, because it will go away. Oil will shoot up.
Hence the word transitory.
Yeah. You might say team transitory could make a comeback. So it didn't work out so well in the post-pandemic, because the economy's adjustment to the supply disruptions took longer than many people thought. But that was the same idea. And look, how did we get down from 9% CPI to below 3% CPI? It wasn't through a recession. We have not had a recession.
Well, hopefully we won't have to confront that dilemma, or the Fed won't, and when they just wait and see from here. Alan, thank you very much for joining us.
Hello, good morning. Welcome to another ES Futures trading stream. It has been a while since I did my last one. And I hope you have been okay. I decided to walk away from... Hello, good morning. From the market during the rollover period. I don't have a good track record during that one. I was just watching it. And also, I am thinking actually how to do this stream, to kind of look at do sustainable over time, not to be in the way of trading. It has been really hard for me. I am not one person that can do two things at the same time. And I guess the hard thing here is that trading is basically stand in front or sit in front of your screen and watch and observe, record, watch, observe, record. And when you see something, just take action, right? Most of the times it's just watching. The trading part happens out of nowhere. You don't know actually if you are going to do something or you are not going to do anything throughout the day. And that can be very boring, right? But that's what trading is. Standing in front of your screen and just watching all these things. All right. Also, I cannot just keep talking. That's the one thing, right? That's one thing. I am not one of those guys that can keep talking all day long. I am more like an introvert person. I'm one of those persons that when do something, really focus on that something that is doing. Right, and when I'm talking, I am not focusing in the market, and when that happens, I usually miss opportunities. Right, today, for example, there was a really good opportunity here. Not a good opportunity, but an opportunity. I actually was watching what kind of damage this market do to the upside, because what was happening here? Let me call my homework here. Let me call my homework. Just a quick recap of homework, right? I saw crude kind of like breaking out of this range. This is not good for the economy. This is not good for the market. This can bring back inflation. Dollar weakening also is not good, but we have a situation here that this may be liquidation, long liquidation, which actually strengthens the market. That gold is this trend is kind of getting old. You can see maybe the laggard part of this trade is maybe in play. And what worries me the most is these bonds that are right here, have a 1, 2, 3, 4, like 10 lows gathered together. Maybe some break here. And what happened, if that happened, is what I am looking here, right? If it has done some continuation, or it can be just a shake off of the weak loans that are accumulating here. This is something that can have an impact in the market. It is far from the lows, though. Right? That's one thing. The other thing is, in the monthly, this is the monthly charts, we have a really, really, really long tail here in this month. I don't care what month it is, but look at this, right? How many months behind? Like 8 months, something like that. 8 months, really tight. Now, what are the odds that can happen now? That is something that comes to my mind the past week, right? As the market was going through the rollover period here, because that actually put the market above this, at the center of this range, and may even target this high. But under the current circumstances in which the current administration is doing a lot of things that actually can have a great impact in the market. and the impact in the negative side, right? It's one thing having market here doing this on a trend. Another thing is under the new circumstances with the recession, deflation, or stagnation. When you have both together, is coming back. Right? We have just here what talking heads are putting out there, right? But that's now in the front. Right, that was before. That was a talk, among some people like Druckenmiller, Jim Dalton. Some people that have some kind of more casual or more a broader view, right, of the market. You don't find those kind of people on the stream, on the mainstream often. Right, because that kind of speakers don't sell, and you won't see that often, right? But now that talk is in the front. Right? It's coming. It's actually being put at the front. Right? That's becoming the talk now. You got to be very careful about that. Right? The market now has re-entered this 5-day range. It is leaving this go-no-go level behind, has recovered almost, how much is this? Almost like, we won't see that in the next chart, how much has recovered, right? In the monthly. Now, the weekly shows something really interesting here, right? It's coming back above this go-no-go level, and it's about 6% from the lows. 6%, if you give me something that is going to guarantee 6% returns on any kind of investments, I take that. And most people, most hedge fund managers will take that. I will just sign blindly. That's what we have now, right? And I have these levels to monitor to the upside, especially this one, right? This is a weekly low here, but it's also, this one is favorably low. Check your monthly charts. That favorable low is the next thing to monitor. Followed by this 58. I don't know what the heck that one is. 58.75. No, 58.75. What is 58.75? I got no idea. I guess it's this. Oh, this one. This right here. Right. Those are the levels to monitor for continuation to the upper side. But notice this, you have a big range here, right? Now a break, market's out of balance, and this can be some rebalancing of the short inventory. Right? The main thing is if this market is going to have penetration of this range, that is my main thing, right? Because this can be something, and you see this if you do 5 minutes, 1 minute, or you do having trading. If you don't know that this is a weekly chart, you can pretend this is a 5-minute chart. You have a trend, this is a trap here, you go higher, trap here, you go higher. The same thing can go to the downside also. You have a trend, a lower trend, you have fake out here, traps a lot of loans here, and so the market can keep going lower. I'm not saying that is what's happening, because nobody knows, right? On top of that, my crystal ball is broken. Nobody knows what's going to happen, but that can be one thing, right? But we never know for certain, because the main thing of this business is uncertainty. Got to be in peace with that. If you don't like uncertainty, if you like 100, you want to be 100% sure of something. If you don't do anything unless you have confirmation, probably you will not like that fact, right? That this business revolves around uncertainty. That's the main thing of this business. Until you find peace with that fact, it's going to be very hard. I think it's going to be very hard for you. Now the daily, right? Again, the same reference come back here, right? You have this is a 16-week range. This is very important. Not very important. It's visually is right there, right? And if this market is being dominated by short-term trading, visually is going to be all the time. Is market trades are visual here, right? Important reference. But if the dominant force is the short-term trading, is going to have even more relevance. Now, another thing is notice how these ranges are. This 5-day range here, 5-day range here, and how wide this range is. And we have something really short range here. Short-term traders love this thing, right? But, I like it better. When, let me show you something, when I have volume. Okay, when I have volume. Yesterday, low. The volume that we're having is very low, less than 4 minutes, 3.5, around 3.7. It's not that, amazing volume. I think it's in the lower side. I have seen lower, but it can be better. And you can see here how volume is declining, right? Volume declining here. And this is this one. And this one records only or closes at 4 p.m. It doesn't store the run-off period anymore, right? And I think that's I would like to see the run-off period. Unfortunately, I think Osim has removed that. Right? It would be more relevant for me if this day or yesterday was higher, and the market failing to have extension here and closing, has closed right, very close to the opening. That's something that I have noticed yesterday, all right? And the market yesterday did not have confidence at all, right? But I'm not going to fight it. Right? Perhaps value was higher all day long. It closed overlapping higher, so it drops a little bit, but it did not come back inside. It did not come back. Window trade is the best, but you can see in Cinco Sino as well. You can see it didn't get back inside, and when that happens, if you are short yesterday, the odds are not in your favor at the close. I would not be short at the close here, or getting close to the close. Yeah, because the rebalancing can happen. There have been some weak references here. I guess I still have it here. This is I have this one in the lower side, this one in the upper side. The market corrected, and we were talking, or I was posting something here in Discord. What is Discord here? What it is? Kind of highlighting these things, what I was watching here. What the market is, right? Where the market is right now, what is the potential things that can happen. But these are just my observations. The goal here is that you do the same thing. You have to do the same thing. You can be wrong, right? You can be right. But unless it is you that are wrong or right, you won't be able to do any corrections. If you blindly follow somebody else, if somebody's going long, I'm going to go long because he says so. Because he said that he based his decision in this and that fact or observations, and it turned out to be right. But you are not coming out with those observations. It helps when somebody is out there kind of guiding you, giving you some guidance. But the goal is that you come yourself with those observations, right? One decision. And most of the job is after the market closes or before it opens, when you are doing your homework. You start watching observations, after observation, and then maybe at the beginning you start to scratch and build potential scenarios so we don't have any biases. And when the session starts, that thinking is over. Right? It should be over. The plan then comes in play. what is the plan, right? What do you plan? What are my plans for today? And this part is not built overnight. It takes time. One has to become, with time, it becomes mechanical, basically. You see something, you see an opportunity, you measure risk, you know what shouldn't happen, what can happen, how do I monitor, how do I close a position, how do I either for a loss or for a win, right? Because we never know what's going to happen. And execute. That's the thing. No more thinking here. It's just execution, right? Because the thinking usually brings us to the situation, and we overthink or second guess ourselves, and that is dangerous as well. Kind of like too much thinking. We might have we can get a cognitive bias, and I find out the best way to combat that, to fight that, is just execute. Right? It's just execute. I had a long bias here actually. No, not really. Right? I thought that today was going to be kind of like when I saw the opening was kind of be a choppy day. Odds of rotation were high, but one thing happened here. Right? They also choppy rotation were high. That was at the opening. Right? This is one thing. This is 946 comment here. There's one exception to that. And these are just guidelines. Remember, these are just guidelines. It worked today. It doesn't have to work tomorrow. Right? Those are just odds. Right? It depends on what. Most of the odds of this kind of guidelines work increases when you do your homework and you have kind of like an idea what are the facts that are surrounding the current circumstances, right? The current market, the current situation at which the market is now. That is why homework is super, super important. All right? And then, all of this, what follows here is just a continuation of the homework. Right? Observation I have been putting here. I did a couple things, and I have time to do this. I have to have time to do these things, right? Because I consider the opportunity was already played. Again, we have to be very passionate. We got to be a lot of passion here, and FOMO, fear of missing out, is real, right? That's real. Overtrading usually follows FOMO. Okay, now this is interesting. This is something else. Okay, you will hear
A bit of a catch up, but I guess the difference is
you hear this a lot. There's a lot of downgrades that are happening now. Downgrades all over the place. I think that's just normal. After all, this market is overvalued. There has been some rebalancing here, the corrections. I don't believe there has been a serious correction here. This is just a pullback from that's normal of the market. That's what I think. And that's part of the big scenario, the big picture. Now, getting back, let's go back to the market. We were talking about how the market, and I did a bunch of this, for example, right? This was obvious here when it happened, when the market was doing this, where it was selling from. The next thing, selling from this low. Now look at what it is now, right? Selling from previous period selling for previous period high. This is, you can see better here. Selling for previous period high. You know, buying, let's check it out. Where I am going to put a line here. And let's check where this line is. Exactly value area low. It was exactly, you know, we have some flickering here, some drop from this A low all the way down to 5,800, which is usually, you know, those spikes either to the upside or to the downside usually are, right, are areas or it's part of the dynamics of the market where traders take profits. Okay, to sell rallies or to buy dips, first we need to assess the market. What kind of market I have here? Is it a market to the upside? Markets to the upside, pros buy dips and sell rallies. If it's a market to the downside, pros sell rallies and take profits on the dips, on the breaks. Right? That was the first. It wasn't. Believe me or not, today it wasn't that complicated. It was much easier than yesterday and than before yesterday. Today, and this is the thing. The easier is to read a market, the higher the odds that market is being dominated, right? Dominated by short-term trading. Okay? That's just a piece of information that I need to carry. That I need to carry on along with all the other ones. Now, this here, this is very interesting here, right? This is TOS. These charts are TOS. Think of swing. I'm going to put this on the side. It's too distracting here. I don't like it over there. And this is market profiles and TOS. I didn't know they have this until like a few weeks ago. They don't have, I believe, this is my opinion, that WindoTrader is the best software for trading. And I think they are so good that they don't need to sell anything else. They just sell charting. This is what they sell. And it's not cheap. They sell this. You cannot trade in WindoTrader. You need to have your own account or your broker with an account somewhere else. Trading just gives you charting, nothing else. But look at this, man. I mean, this is not, for example, you have value area high 18, value area low 5,800. But 1 point lower here, 1/4 lower here. That's not bad. This is market profile. Market profile lacks. There's no comparison with WindoTrader, I guess. If you want to use, and this is something very important when trading, right? Market profile here. I can have an idea here, but I don't know, for example, how wide, how much volume do I have here, right? I have, for example, code or name. This one, what is this? What is even going now? I cannot see it now. Oh, okay, so I have to go change this to market profile. Okay, I have 30,000 here. If this wide is 30,000, this is maybe half. This is 20. What is today? 30,000 here, 30,000 here. So far, maybe this is 10,000, right? But I'm just guessing, right? I have exactly the amount, right, here in WindoTrader, 13,000, 12,000, which is much better than this. And this is very important. And also the current period, what's happening right now. Higher volume, really high volume, and my charging are in 2 ticks always, is 10,000. I don't have 10,000 here. I haven't had 10,000 here. All right. For this market being trading, the way how it's trading is not, it's nothing like amazing volume here. Yeah? And you can check as well. If you check, my bad, I didn't mean to do that. If you check, let me call my CME charts. If you check the volume overall, I mean, this is the years, not the market, right? 1 million, 1.3. I mean, yesterday was very low. Okay. Friday 1.5. This is very, very low. This is good, right? And if I would have 1.7 or close to 2 millions here yesterday, do you remember the daily charts that I showed you? That would have been 2 millions. This thing here, this little range, daily range from yesterday, and the closing pretty much the same level as the opening, would have been more relevant. You know, the short would have been would have had higher odds, right? Or the continuation, the downside continuation. That's why, because the volume gets accumulated there, but it didn't have it. There is nothing here. So far, this market, if I check, this is, let me call this again. I have too many charts here. Oh, ho, 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 ho. Where are you? No, this is not trading. Maybe here. No. Where are you? Well, the thing is, this is the first day of the current contract. You can see our inventory is just is long. You know, the contract, June contract is starting to load on the long side. Okay. There is something here that I am missing. Oh, I guess it's here. Yeah. It is. It had set a different chart drawing set. This is the first day. Too much. This is the first. This day here is the first day. The first day of this range is the first day of the current content. I have it here. Oh, look at this. 15,000, 20,000. Oh, okay. I don't know what that is. Okay. And as you can see, there's not much going on here. This is not good. This low wasn't good. What are you going to do here? You know, this is a nowhere land here. You know, taking a trade here. You know, the obvious trade here is to the downside. But one of the things we need to do any kind of action is we need location. We need to find location and opportunities also. You know? It is not just, okay, I want to be short. Where am I going to be short? I'm going to be short when the market comes up here. But what are the circumstances that have happened for the market to get up here? For example, right? It is one thing that the market starts to rally and then it stalls, right? It stalls. We are getting really close to the close, and inventory or this market is trying to go higher while value is lower. Right now, this started going higher, and value does not move inside yesterday's value. The same thing that happened yesterday with the later rally can happen again, but this time to the downside, to the opposite direction. All just because of value, right? Because what I am seeing here is short-term trading, just short-term trading. And this is the resolution. What happened here is the resolution of what I started here during this day. I'm going to open this market profile, okay? Look how many lows do we have here. Well, 1, 2, 3 lows here. We have excess here. Nice excess. 1, 2, 3, 4, 5, 6 ticks of excess. But this one just adds to this one. Now this low is very, very weak. Okay? And below that, 200 moving average, an area where traders may try to sell or buy this market. It's not a good thing for me here, or it's not an area where I can find right now, or at least right now. I don't see an opportunity here right now. All right. Do you have any question? If you have any question, please just let me know. It is 11:24 right now. Oh, by the way, I am testing. I have a Sierra. I have a Sierra trial. I am trying to figure out how that thing works. Because Sierra is something that most people has. Obviously, Thinkorswim also, because everybody that I know have a Thinkorswim account. Most of them, at least, because it's free. Right? You have this charge and you don't pay. For example, I pay for Window Trader, a good amount here for Window Trader. I also pay for my Photon account a month, plus the exchange fees, plus the commissions. So there's a lot of things that, the cost of doing business is significant here. Significantly higher than just using those charts here. And the fact that I can have this as just bars, without opening and closing, that's really nice, man. It because even though I may have these bars, for example, and this is 30 minutes bars, same as this. Right? Even though I have this, the fact that I can see the opening and the close and the current price and the close is very distracting. Oh, by the way, this is an inside bar, my friend. There can be something here. This is an inside bar. Oh, damn it. It didn't, no, okay. We have balance, breakout of balance. We have a 3-day balance, and now this market is this may have something to the downside. Let's see, this is still in range, This, we have balance inside balance here. Notice where it's being bought. Let me highlight this one here in my. I need to put this thing here as well. This is 5800. Where it's been bought from? That is very questionable. Very, very freaking questionable. Yeah. Be corrected. This is the thing on. This is the thing on Thinkorswim, right? Now this is low is very, very weak, man. Very freaking weak here. Damn, man. I took a quick. I thought this is. I took a short here. Aim to fix this low here. This low has excess. Is bad. It's not good for me. It's not good, man. How much time to change periods? It's just a few minutes to change periods here. There can be something here to the downside, but the fact that it's at the low, I don't like this. This is no. The thing, pay attention to this. Okay, this is what I like. How do I move this half back to here? You know, and I'm using fibs here. I want to move this half back to here. Okay. That has not happened, but just playing here using some imagination here. The market needs to come back below this 200, below the 200 to move this half back down here. And why I'm doing that, because I've noticed that's what the market does, but often does. And that's just tremendous chop here. I had took a couple trades here, but man, I am not willing to hold this trade. I think the risk is high. I think the direction can be right, but the risk is too high. Pretty much a scalping here. You know, I don't like that. I don't like that. Why I don't like it? Check. You know, this market has a gap to the upside. 58.76. How much are these 58.76? Oh, 15 points. That's a lot. $57, $55. All right. Coming close to this area here. Periods, we may have a spike here. We may have a spike when periods change. All right, guys. I guess I got to go. I need to do something here. You know, this low has been corrected. I think it has been corrected, but there can be. I think there can be still something here to the side a little bit, but the risk is just too high now. Be careful here. I hope you have a wonderful day. Rest of the day, stay safe. Hope I can see you tomorrow. Bye bye.